In this video, I'm going to show you how to design your own trading plan for use in trading Forex and indices. I'll take you through it step by step the way that I do it. At the end of this video, you will be left with the knowledge of how to design your own trading plan and also the simple trading plan designed in this video. Before we start, if you're learning how to trade, please do subscribe to Decisive Trading. It's free and there are a lot more training videos to come. Okay, so where do you start? First, consider which time frame you want to trade. This depends on work commitments and personal preference. For the purpose of this video, I'm going to look at the 1 hour time frame, as I think it offers a happy medium. Second, do you want to trade trends or be a counter trend trader? For me, I like to incorporate both. So in this trading plan, we will focus on trends, but also take smaller positions counter trend. And I'll show you how to identify overall trends on the charts. Third, entry signals. What will you look for as a signal to enter? I use price action, and we will use the two easiest signals, those being a pin bar and an engulfing candle. For ease, we will use pivot points as our entry areas since they are readily available and do not take skill or practice to pick out, unlike support and resistance. Fourth, consider position size per trade. I recommend a maximum risk of 1% or 2% of overall account value per trade. When you're first starting and learning a new trading system, trade much lower than this. Fifth, think risk reward. Specifically, what are you aiming for? I like the market to tell me when to exit, so what we will aim for initially is a 1-to-1 risk reward, and then we will exit if we are in a counter trend position and let the market tell us when to exit if we are in a position that aligns with the overall trend. Sixth, you need to backtest, backtest, and backtest. Okay, let's move on to the charts and I'll show you how to put it all together. Please note, this is a system I have designed for the purpose of this video. I have never backtested it or even ascertained that it works. Okay, we are on the Australian dollar US dollar. We're on the daily time frame. Although with this trading plan we have decided that our entries will be picked off of the 1 hour time frame, we are looking to identify trends first. To find overall trends, I always use the daily time frame. All you're looking for is a market that has been making a move in one direction for an extended period of time. You can see this has been falling away. You can actually see it's been falling away since 2013. Another good way to do this is to identify trends the same way that large institutions and banks do this. And from just my knowledge over the years, I know that they use the 200 simple moving average to do this. So if you add this to your chart, I'm just going to make it blue so it's nice and easy to see. If the market has been trading on one side of this moving average for an extended period of time, then you can say it has been trending. So let's just make a decision and say if the market has been trading on one side of this moving average for a minimum of 2 months, then we can say it is in a trend. So we're in just almost August now, so we'll just say June, May, June, there you go, 2 months. It has been underneath the moving average. You can actually see it goes all the way back here. So this is a very strong trend. Once we've identified this market is downtrending, we now know that our main trading bias is going to be selling this market. You can actually also see right here the reaction off of the 200 simple moving average. This is where big banks and institutions, this is where they look to invest money. After you've done this, you can drop down to the 1 hour time frame. That's let me just delete all this stuff. That's all you need off the daily time frame. The next thing we need is the pivot points. Most charting software allows you to add this automatically. You usually have the option to display only last time period or all time periods. Obviously, when you're designing a trading plan, you're going to be backtesting, so you want all time frames. When you are trading, it can be helpful just to have the current days because it stops you from being distracted, because you can see it's quite a mess when you put all of these on. So now we have the chart set up. We know that we're only going to trade off of pin bars and engulfing candles. I've already done a video on the best candles to use when trading Forex. So if you don't know what a pin bar or an engulfing candle is, do just watch that video. After this, we have to decide on our position size. I've already recommended that you only use 1% or maximum 2% of overall account size per trade. When you are beginning a new trading plan, or if you're just a new trader, I would suggest using a lot smaller stakes, because until you're comfortable with a trading plan, or until you're comfortable trading, you don't want to lose large amounts of money. So let's just say we're going to do 1%. The next thing is your risk to reward. Now, if we're selling into this market, we are following the overall trend. So for this trading plan, let's say we are going to look for 1-to-1 risk to reward when selling, and then we're going to close half position size. That means if we're trading £10 per pip, $10 per pip, when it gets to 1-to-1, we would close it down to £5 or $5 per pip. And then we will let the market run. To decide on the exit, we will discover that as we begin testing this trading system. Now, if we're buying into this market, this is counter trend. So what we'll say is we'll just look for a 1-to-1 risk to reward when buying. This is not the method that I use all the time. I'm not giving you bad advice here. I'm just designing this trading plan as I go to show you how it's done. As you're backtesting, you may change these entry signals. You may change your risk to reward. But what I'm doing here is just showing you how it's done. So after we determine risk to reward, all you want to do is you want to start testing your system. Now, I mainly trade the 5-minute time frame. For me, when I'm backtesting a system, I go as far back as my charting software will allow me to go, which tends to be 1 year. That means I will test every day for 1 year. Every signal, I will mark down the profit or the loss and then calculate the overall at the end of the year. On the 1 hour time frame, I would suggest minimum 1 year, preferably 2 years. You're going to hear a lot of people say backtesting is useless. They'll say that they're only interested in what works in the market now. My advice is that listening to that is going to cause you a lot of heartache. Basically, it's a lot of rubbish. Backtesting allows you to, first of all, see if the system works, and to see if it works over an extended period of time. See if it's something that you can use for a long time. Secondly, it allows you to build the confidence that the system works. If you've backtested it and you've seen that it works, say 70% success rate, then when you're in a position that's moving against you, you know that either it's going to turn around and be a winner, or if it loses, it's only the 30%. It's only part of the 30% of losers. You know that overall, you're going to come out on top. If you've not backtested, you have no idea. So every position that begins to move against you is going to make you nervous. You're going to want to exit, and it's not going to feel very good. So all I'm going to do here is I'm going to take a portion of the chart. I'm just going to start right here because I can see a pin bar. Right here. So this would be your entry signal. Now, a lot of people, when they enter the markets, they look for retraces to enter. I never ever trade like this. I always look for the market to then break the candle. So if I'm looking to buy, I look for it to break the high of the candle. If I'm looking to sell, I'd look for it to break the low of the candle. The reason is, using the pivot points. This is the pivot point right here. So our signal is on the pivot point. That is the first confluence. The second confluence for me would be the candlestick pattern. This is a pin bar. That is the second confluence. The third confluence is that it breaks the high of this candle. So that's 3 things all aligning, giving me confidence to enter this trade. The stop, the best thing with the stops is as you are back testing, you will discover the kind of stop that works best. But for the purpose of this video, let's just say we use our entry to the length of the bar, which is 20 pips, and then we'll use another 50% for the stop. So the stop would be 30 pips. So 7402.5 would be the stop, and 1-to-1 would be 7463.2. So 63.2 is right there. So there you go. That's within 2 hours, you're out of the trade for a 1-to-1. Now, counter trend, you can also enter half position if you want, or you can enter the full position size and just exit at the 1-to-1. You might also find when you're backtesting markets that allowing it to run is beneficial, and this makes you more money. But this is the purpose of backtesting. This is what you find out. I've never tested this system. I've just literally came up with it as I've been making the PowerPoint video. I've no idea if it works. And then what you do, you follow the market and you look for your signals. You just continue to look for your signals. There is a pin bar right here, which is a sell signal. The entry is below the low, which is down here somewhere. Now, you can decide that if you aren't triggered by the end of the day, you close the position. This is usually what I would do. I don't want my position to be triggered during the night, especially not when the Asian session is in effect, because I find it chops around a little bit. So this one steps into the next day. We close this position, we ignore it. You're then looking for another signal. There's a pin bar here. It doesn't quite reach one of our zones. So for the purpose of this video, we're just going to ignore it. And you might discover that you can take entries within a certain number of pips of the zone, and that works out well. But for this video, we're not going to do that. We're going to look for the next signal, which is right here. Pin bar. We are entering below the low of the pin bar. Let's just make it straight on the low for simplicity. Stop is bar length, so let's say 30 pips. So 45 pips is your stop. 7481. Stops up here, right there. You're then looking for 1-to-1, and then you're closing half your position. So when you get to 1-to-1, which is 45 pips, 7390, you close half your position right here. There's a couple of things you can do now. You can either, when allowing this trade to run, you can bring your stop to break even. You can bring your stop to the closest pivot point, or you can wait for a signal that tells you to go in the opposite direction. So you'll be looking for a buy signal. Now you don't get any buy signals here. You don't get any buy signals here. And this would run against you. So just by looking at this trade, I'm going to say that we move the stop to the closest pivot point, which would be right here. So you get 1-to-1 here, close half your position, the market pushes back and stops you out here. Now you need to take a note of all of these trades, your profit or your loss for each one. You need to add them all up. So at the end of the back testing, you can work out if your system is working, basically. You then follow the market along. You look for your next signal. Here's a pin bar right here. It doesn't quite touch, so I'm not going to take it. Right here is an engulfing candle. You can take it. You would enter below the low. When you get to 1-to-1, you would move the stop to the closest pivot point. This would be the closest pivot point. Let's work out where 1-to-1 would be first of all. So 40, so 60 is your stop. 7496. 7496 stops up here. Your first target is 7377.2. Let's just make it there. And your stop goes to the pivot point right here. Oops. Once it gets to 1-to-1, and it comes back up and stops you out. Now, as you're testing this, you may choose to adjust this. So you may choose just to exit full position at 1-to-1. If that is going to make you more money, then do that. This is the reason for backtesting. You begin to understand what works best. This is technically a pin bar. It's got too large of a nose for me. I wouldn't have traded this. This isn't quite an engulfing bar, so I'd ignore this signal. And I would just move along, and you just keep doing this over and over and over again, looking for your signals, every single one of them. Pin bar right there. This is not a pin bar. The tail is not 2 times the length of the body. You have a pin bar here. This is very close to being a pin bar. I don't think this is actually quite a pin bar. You'd measure this when you were trading. This is an engulfing bar, definitely. It's larger than 1, 2, 3, 4, 5. These 5 bodies. Let's double check that it's larger than that large bullish bar. 38 pips is the body. 33 pips, so it is an engulfing bar. Enter below the low. Your stop is bar length plus 50%. And this is the move that this type of system would catch best. It's where it continues to move down. You're not getting any, it's not bouncing back against you, it's just crashing through each pivot point, and you're just moving your stop down and following it down. And that is honestly how simple it is to design a trading plan. You can design any trading plan you want. You don't have to use pivot points. You don't have to use those entry signals. You can use support and resistance. You can use crossing moving averages. You can use a relative strength index. You can use absolutely anything you want. And when you come up with a trading plan, the back testing is what shows you if it's effective. This is the key part, is the back testing. I mentioned it 3 times in the first half of the video. Back test, back test, back test. It not only builds your confidence, but it also shows you that it works. It shows you how much money you're going to make. The great thing about it is if I design a system and if it's profitable, but let's say in 1 month, the biggest drawdown is 20%. So 20 losing trades in a month. And let's say even I'm using 2% per trade. That would be a 40% drawdown. I am not interested in trading a system that has the potential to lose that much money any given month. Even if it works every other month, the reason I won't trade it is because psychologically I know that if I start losing that much money, that's when I struggle to remain focused and to remain unemotional. I prefer systems that are highly effective, 80% effective and up. That's what all my systems are. That's all the systems that I trade. My trade-off for that is that my risk to reward tends to be 1-to-1. I don't aim for a lot of 3-to-1s. I don't aim for a lot of 5-to-1s, 6-to-1s. But it works fine for me. It suits my personality and it works. I've backtested it. I've traded it live for a very long time and it works. Okay, so quickly, let's drop down to GBP Euro daily time frame. You can see this one is in an uptrend. See, it's made a large move here. If we add the moving average, 200 moving average, make it blue again so it's nice and easy to see. You can also see right here the market reacting off of this moving average. This is the big institutions and the funds using this. Has it been above this moving average for at least 2 months? Yes, it has. We are in an uptrend overall. We then drop down to the 1 hour time frame. We add our pivot points. Another thing on pivot points, I'm not sure if I've mentioned this actually, you can go on to dailyfx.com if your charting software doesn't allow you to do this automatically. On dailyfx.com, every morning they will update pivot points for all Forex pairs. Okay, so here we are. We are in an uptrend, so you just scroll back. Now, obviously you would be scrolling back for at least a year, preferably 2 years to test this, but I'm just doing this for the video. Engulfing bar right here. You're entering above the high. This is all you're doing. You're just testing this system and you're just working out what it makes, what it loses. You can refine your strategy somewhat as you're trading. You can find out what's going to work best, what's not going to work. Perhaps you'll find that pivot points are useless. Perhaps you'll find that you don't make enough money off of them. Perhaps you'll find that you're just breaking even overall. But this is how you design a system. The key to it all is the backtesting. Now, when I say backtesting as well, I need to mention this. You can get to a position where you begin to refine a system too much. So you can start to have crazy things happening where, like, you're having one loss, and instead of accepting that loss in your system, you're trying to adjust the system in a way that gets rid of the loss. You can't have a perfect system. You have to be expecting some losses. If you do just refine it and refine it and refine it, one of two things will happen. Either you won't have any trade entries, or two, you'll find that it doesn't work the way you've backtested it, because you've refined it so much. As you've continued to refine it, what worked on your first trade will no longer work, because you refined it so much that by your 10th trade, it has completely changed how the entry would work on the first trade. So I hope that was helpful. If you are learning how to trade, do subscribe to Decisive Trading. It's free and there are more trading videos to come. I'm actually considering doing live market analysis one morning a week. That'll probably be on the FTSE. And if you do have any questions, do just post them. I will try and get back to you as quickly as possible. And I hope that was helpful. I'm James Orr, and thank you.